Good morning, everyone, and welcome. We are IOOGO, and we are hosting a tax and accounting webinar today. And thank you so much to Capital Factory for hosting us.
Yeah, good morning. Good morning. Happy Thursday. We are excited to be here today again. We're hoping to bring you a lot of good information. It's tax season, and once again, tax season got extended. So it's that fun time of the year. So, we're going to try to make this as fun as possible. Because we're talking about taxes and accounting and how fun can that be. But anyways, thank you for being here.
Yep. And just to tell you a little bit about us, I'm Christy Albietto. I am a tax accountant and the COO of IOOGO, which means I run the accounting team and most of the operations within the business.
Yeah, and I am Josh Albayero, CEO of IOOGO. I'm a tax accountant. I'm an IRS enroll agent, and I now most of my day now goes into webinars like this and working with the sales and marketing team. Because I think Christy's going to tell you here in a minute. Now we have a team that works with us, and taking care of all of our customers and all of their needs. So why don't we show them, Christy?
Yep, definitely. So a little bit about IOOGO. We have a team of CPAs, accountants, tax pros. It really depends on the client's needs. You may not need a full-blown CPA. You may just need a bookkeeper, an accountant. So we have a team that covers everything. You may need all three. But in the center of our team is our technology. And the technology is what really makes us special and different. It makes our operations more efficient, which allows our team to focus on the client and their individualized needs, because no two businesses are the same.
So one thing I like to add to this is that we have understood, throughout, the 20 years that we have been in tax and accounting, that technology is extremely important for everything that we do. But unfortunately, the IRS and the federal agencies and the local agencies haven't caught up to that technology, right? So there's still the need to have the knowledge of your CPA, the knowledge of your accountant, the knowledge of your tax pro, depending on the size or where your business is right now. So technology, instead of creating the technology for you to do your own accounting, right? We created the technology for us to be more efficient as accountants. And, as Christy said, give you more time, give you more love, give you more attention, right? And I think, when we look at the three main pillars of a business, we're looking at your sales, your customers, and your financials, right? You cannot grow your business. You can't leave, you cannot see the next steps, the next version of your business if you don't take care of those three main pillars, right? So, with that being said, let's move on and let's talk about, we want to show you, before we get into the fun part of tax and accounting, we want to show you who some of our clients are, some of the faces you're going to probably recognize, as we have been working with a lot of the young capital factory startups and more seasoned capital factory startups. I think the coolest part is that we have gone through 0 to 75, 0 to 100 with some of them. So take it away, Christy.
Yep. So some of our clients want to highlight is Simbury. They've done a really cool thing with Uberizing pool cleaning, especially in that Texas summer heat. Nobody likes to be out there doing it themselves, so they connect you with pool cleaners. Line Dance AI is doing some neat stuff with artificial intelligence, especially in the hearing impaired community with sign language, something that we haven't really seen anyone else do.
This is actually, it's not a Capital Factory company, but it's it's a really cool company. We met at Capital Factory, and Mississippi International, they do branding. They have a really cool mission as well, and they do they're in the e-commerce space. And he actually Paco is the CEO. He's been running this business for 6 years now. We have been lucky to be part of his business for the past 4 years and seen the growth and assist with the growth. So look him up on LinkedIn. He's always on LinkedIn. He's always, he does a really good job on marketing the company and really, being the face of the company.
It was recently on Good Morning America, or featured on Good Morning America.
Right. RoboAmp. I mean, if you haven't heard, if you haven't heard of RoboAmp, you are either new to the Capital Factory family, or you just Roberto hasn't gotten to you yet, right? But it's a really cool company. Their technology, is focused on making websites faster, which we all love. We've used RoboAmp before, and Roberto is just a cool guy, right? And he was I think 2019 he was a Capital Factory Entrepreneur of the Year, Founder of the Year, right?
Yep. Low Waste Home is another mission-driven business. They are focused on bringing attention to products that are friendly for the environment. So you can find them on Instagram a lot.
And then Capital Factory's, I would say, most beloved attorney. If you haven't heard of who Kyle is, Jones Kurtz, the firm Jones Kurtz. I mean, they're always on Slack, right? And the Slack channels, right? Anytime someone's asking for, I think this is just reputation, right? Anytime someone's asking for an attorney, the name Kyle comes up, or Jones Kurtz. We love working with him. We met him at Capital Factory, and we've done business with him, since then. Just a cool guy, cool firm to work with, and so we just wanted to show you a little bit of who our customers are. We have close to 800 customers now on our profile. Most of them are, the startup, who's, just, the young startup, the mid-sized startup, the traditional business, small business, and, with 1, 5, 15, 25, 30 employees. And, but we wanted to show you, what, some of these faces are, who some of these businesses and what their faces are, because it's important to us, right? That you understand, right? That at certain point in your life, you are going to, have to pay attention, not just to whatever you're working on, but, also tax and accounting.
So let's get into what we're going to talk about today. And it starts with accounting. Every business needs basic accounting, but this will be accounting that is at least necessary to file your taxes. And then talk about when do you engage support for your tax and accounting. Then considering the taxes that you're going to have to pay, not only for the income, but for payroll. But we try to end it on a more positive note on credits and deductions that can help offset some of that tax liability. And then finally, we'll leave you with some resources to take that next step to support your own business. And one thing we didn't mention at the beginning, and I want to go ahead and mention now, is we're not the type that waits till the end for questions. So feel free to leave a comment for questions. We'll keep our eye out and answer them as we go through the presentation. And so that way it's relevant at the time that you're asking it.
Yeah, so this agenda, right? We have an agenda, but this whole presentation, this whole workshop is for you. So feel free to drop questions, in any of the outlets where this presentation is being casted, or if you're going to watch this after the live session, then feel free to reach out to us directly, and we're happy to chat with you. But cool, let's move on.
Right.
Let's talk about tax and accounting. And I always like to start with the simple stuff, because we always want to make it, we always want to make it, we think about making it to the next step, right? To the next level of, the next phase of our business. And we focus on what that's going to look like, right? But then I like to share some of the experiences that I've had, not only as an accountant, because I get to talk to you right now as an accountant, as an enrolled agent. I get to talk to you as a tax expert, but I also get to talk to you as a business owner who has been doing this for 20 years, right? This is my third business. And, I want to share with you some of the experiences that I went to, even though I had the knowledge of tax and accounting. Some of the things that I, some of the mistakes I made, or some of the things that I didn't pay attention to in the beginning, that you should be paying attention to as a young startup, as a young founder. And simple points such as bank account and records, right? you want to make sure that you're paying attention to, your bank account, and the expenses in that bank account, and keeping all those records, right? It's and now with that, we are in the digital age, where we can just snap a picture and upload to our favorite bookkeeping software, or just to file, a Google Drive file, a Dropbox file, whatever, right? Just to keep that organization, and making sure that we're making that separation between business and personal banking. It's super important, right? Because if you are raising capital, if you are trying to get some type of financing, whether it's debt financing or investment financing, all of this is going to come up. All of this is going to be part of that process. And you want to make sure that you are prepared for it, right? You don't want to be running against the clock, just because you either didn't know, or you just didn't want to pay attention, right? So if you are in that small or that part of the business where it's still small, you're still planning, you're still maybe you're on the 1 or 2, 3, 4 transactions a week, or maybe a month, right? It comes down to habit, right? To understanding that your business cannot grow without you taking care of its finances. And no one else cares about your finances more than you do, right? And, everyone, if you can hire an accountant, you can hire a CPA firm, and the CPA is only going to be as engaged as you are, right? So this is important to begin to build that habit, right? No, you are not here to become an accountant. You're here to understand what the basics are, so that you are taking care of your business, right? Being mindful of tax deadlines and extension is very important. When do you need to file your taxes? When do you start, to go and ask for help? Because you should not be filing your own business taxes, right? Well, number one, you got better things to do. Number two, you can make mistakes that can haunt you for many years to come. So you want to make sure that you're mindful of those tax deadlines, because it is a lot easier for us to work on your file and on your company if we are talking about 3 months before the deadline versus working on your company's taxes 3 days before the deadline, right? It's just it's important to understand those deadlines, and we are going to cover them very soon here in the workshop. Staying on top of stock records, I think, because of the nature of the platform, right? Capital Factory. I think that most of us at some point, we're raising capital, wanted to raise capital, or are raising capital. So it's important for us to have all of our records, not just the stock records, but all the records that I just talked about in order, so that whenever that term sheet comes around, or whenever the request of documentation before the term sheet comes, you are ready. You know who owns every piece of your company. Maybe you've given employees some stock option, for compensation reasons. Maybe you have small investors. Whatever the case it is, right? You can do this either via Excel, or you can use Carta. There's a lot of good software out there that can help you keep your stock records in order. And I just want to point this out, right? If you are in the planning stages of your business, you just need to make sure you incorporate this into your life, right? This is this is something that it's a killer for a lot of businesses, who are raising capital. There's just the habit of doing the boring stuff. It's a challenge, right? And it takes me back to I was watching this documentary a couple of days ago called General Magic, and Andy Hertzfeld says, "Hey, I was caught up on doing everything that I needed to do, but I just didn't want to do the boring stuff," and that had a big issue, and created a big issue, right? In terms of when the product was delivered and things of that nature, right? So the same thing can happen, when it comes to finances and tax and accounting. Is it's the boring stuff that we don't want to look at, we don't want to take care of, or because it's boring, because we were not trained on it. But it's important that we that we understand that is one of the main pillars of our business, right? And so I want to show you some reports real quick. The profit and loss report is a simple report that you need to start learning to do or learning to read. It's just a simple report that shows you how much money came in and how much you spent and what your potential profit or loss is. And why do you need to do this now? Why do you need to take the time to build something like this right now? Well, one is because it's a lot easier now that you're young, right? That you are new, that you're starting the business, right? It's a lot easier now. Two is because you will inevitably have to know your numbers. You have to understand your numbers. You're going to be talking to investors. You're going to be talking to partners. You're going to be talking to employees. You're going to be talking to, anyone else who wants to learn about your business. You need to know your numbers, right? And this is a very simple report to create. You can use technology to create it. You can do it on Excel, or you can have someone create it for you. But the idea is to understand, that whatever we're doing as founders, as business owners, it's not just about creating software, right? Or creating the brand. It all goes back to the financials, right? What about the balance sheet, right? That's another report that.
Josh, I just want to add something real quick for the P&L report. This was also something, if you were seeking a second round of the PPP loan, this was a report that was required to attain that loan.
Right. So I got lost on just talking about investment, but you're right. If you're the federal government saying, hey, you want free cash, well, show me that, because one of the conversations we had at the beginning of this PPP and EIDL situation, right, was that why is the government asking for all these documents and all these things? Because the government thinks that you're running your business like normal businesses run, right? And you have an accountant, or you have all of these documentations. Then when you show up, when you get in line and you get to the bank and they're like, hey, we need all these documents, and you're like, why? Because that's what normal business looks like, right? So it's important that you begin to at least become aware of these requirements, right? So the balance sheet, I'm going to talk briefly about it. It helps keep track of your assets and your liabilities, right? You have, if you have, how much money you have in the bank account, how much money, how many customers you have, that owe you money, right? What we call receivables, right? In the accounting industry, and all sorts of other, assets that the business has. And then it goes to liabilities, right? How much money does your company owe, right? Do you owe the federal government money? Do you owe the bank money? Your investors, right? Your cap table is typically on your balance sheet as well, right? So this is something that I say, don't do it yourself. This is where you need once things getting, they begin to start getting more interesting in your business life, then you're going to need help building this right? For two reasons. One, you don't want to make mistakes. Two, you did not open your business to become an accountant, right? This is, the boring stuff that needs to be done right. And then two other reports that, I'm not gonna show you. I'm just going to briefly mention them. Is the cash flow statement, because you need to know how much cash you have and where is it coming from. Is the cash coming? Do you have $100,000 in the bank because of sales or because of investment, or where is this money coming from, right? That's what the cash flow statements, one of the things that the cash flow statements, will do for you, and it'll tell you how much cash you have and how long it's going to last you, So, and for those of us, who at some point lost money because we were building the business, it's also important to understand how much cash we're burning, right? So here are some basic reports that you need to be aware of, right? You probably thought you were coming to this webinar to talk about just tax and accounting. We want to talk to you about important parts, basic things of your business, as they were, in regarding to tax and accounting as well. So, all right, let's move on.
Okay, so Josh has mentioned a few times about when to engage accounting support, and when you're first starting out, like he said, you need to really know your numbers so that you know your business, and things are simple at that point. And so you should really look at doing it yourself. You get to know how everything works so that later when you do engage somebody, you can really call them out and question them if something doesn't seem right. But your business is going to grow. Your time is going to be busier with other things, growing the business itself. So at some point, you're going to want to engage an accountant or a team of accountants that is helping manage your books. You're not completely disengaged. You're still kind of a 50-50 partnership. And then when business really starts to boom, you look at fully handing it off to an accounting firm that hopefully is a good accounting firm. And even though you're not doing a 50-50 partnership with them anymore, they're engaging you and letting you know at a minimum monthly what's going on with the business and the financials.
What I always say is, if you don't know your numbers, you don't know your business, right? You're going to have to understand that, whether you're in negotiations with VCs, whether you are trying to take a loan from the SBA, whether you are trying to raise money from friends and family, you need to know your numbers. You need to be able to articulate how much money you're going to make, how much money you're not going to make, how long it's going to take you to make, and for that, you need to do, start doing the little numbers yourself. What I mean, the little numbers is because, we all start with small numbers, right? And then you see the progression, right? And we showed you who our clients were, some of our clients, right? And with most of them, we've started with a simple conversation, right? Hey, Josh, you know what? I just don't have the money to pay right now. And, and then we look at their transactions and we say, not only do you not have the money to pay, you don't have the transactions to merit the involvement of an accountant, a CPA. But, you will get to taxes, right? And at that point, you are going to need someone, right? Because you shouldn't be doing your own taxes. But at the same time, it's a good practice for you to know what those numbers look like, and let the business tells you what it needs, and you just need to be listening, because as we have shown you people who have realized, hey, I'm not going to be my own accountant forever. I don't want to do that forever. I am going to be engaged. My business is growing. I need to focus on being an attorney or being, an e-commerce CEO and not being a bookkeeper or an accountant. We do, on the other hand, we have the other the other entrepreneurs, right, who would say, no, I'm not going to spend $200 a month, right? I can do this myself. And then you end up in the inevitable situation where the accounting didn't get done right, the taxes did not come out right, and your sales are also not there because you're too focused on doing something, the business is telling you already you shouldn't be doing anymore.
Okay, so your business is growing and now you look to hire help for your business. And so you have to consider any kind of payroll tax implication. And what I mean by that is the decision to hire someone as an employee that's a salaried employee or hire someone as a contractor. When you hire someone as an employee, you agree on a salary that you're going to pay them. Let's say it's $50,000 a year. But on top of that $50,000, there's a portion of that you also have to pay for payroll taxes, and that's going to be Social Security and Medicare. And so it's 50,000 plus a percentage of that that you have to pay to the IRS on behalf of that employee. This is why a lot of startups will look at hiring contractors first, because with the contractor, you can have an agreement to pay them $50,000 for a project or pay them hourly or whatever the agreement may be. But you pay them that money and then that's it. And they are responsible for paying for any payroll taxes on top of that.
And I think the one of the things you have to worry about, right, when it comes to contractor is, the constant oversight from governments, right, the local government, right, and that, you cannot treat a contractor as an employee or vice versa, right? And they are, I go back to the word habit, and when you get into the habit of just hiring contractors because it's easier, because it's it's less draining on your bank account, and then you hit a certain pivot point or a certain growth point where now you are making more noise where you're making because of your success, right? And as you grow, you're going to start seeing the more involvement of, the Department of Labor or the Texas Workforce Commission, for those of you who are in Texas. And, that's when the problems come in if you have the wrong habits, right? Because, it's important to understand, right, that, contractors are not employees and employees are not contractors. And it's a big issue. It's a big deal if you break that rule, especially if you do it for a long period of time.
Yeah. But with those payroll taxes, let's say even if you're just paying yourself a salary, you do have to file every quarter. It's called Form 941. And what that is it's telling the IRS, who you are, how many employees you had, how much you paid them, how much they wanted withheld. And then the rest of this is really calculations of the IRS dictating how much should have been withheld and how much you need to send them at the end of the quarter. So this is something that you're either going to be paying every payroll, every month, or at minimum at the end of the quarter. And sorry, I lost my train of thought. So
the report is due,
I know.
the report is due, on March, the quarter, on a quarterly basis.
The quarter just ended yesterday, which was March 31st. So that means that you are now responsible for filing that form, paying those taxes. You have until the end of April to do that for Q1, and then every quarter continues on like that. Then you have the unemployment taxes that you have to deal with on both the federal and the state level. So at the federal level, this is actually a once-a-year event, unlike the payroll taxes that are quarterly. The unemployment for the federal is once a year at the end or after the end of the year, and you're going to file Form 940. It looks very similar to 941. Again, you're telling the IRS who you are, how many employees you had, and it's calculating some numbers for you. And then this one is due by January 31st. But then you also have the state requirements for unemployment. And that one is a quarterly event, just like the payroll taxes, where you are setting up something, with the Texas Workforce Commission. You're setting up an account. You're letting them know also how many employees you had, how much you paid them, and they're going to tell you how much in unemployment taxes you have to pay. And they will check to make sure that what you're telling them matches what you're telling the IRS. So if you are trying to not pay the state, they will find out. This is something that, at some point you're probably not going to want to do, especially when when you have a lot of employees. And that's when you really want to make sure you're engaging an accountant or some kind of payroll provider.
The last thing, the one thing I want to clarify is with the 941, if you put it on the screen, Christy, is that the federal government is going to decide how often you pay this. They're going to let you know via letters, and say, hey, you need to be, paying. You need to be sending the money on a biweekly basis or on a monthly basis. Mm-hmm. But typically no one sends it on the quarterly basis. The only thing you send on a quarterly basis is the report, right? So the report is basically telling the IRS, hey, this is what I already sent you, right? This is the money that I already sent. And then for some people who have the R&D tax credit, right? And if you're taking the R&D tax credit against payroll tax, the calculation is made here, on the credit the credit amount is entered here on the 941. Even though there's another calculation that can be done, for people who are using companies who are using the R&D tax credit to offset their income tax liability, right? So very cool stuff here. Like Christy said, this is, when you start hiring employees, things start getting more interesting, and you need to understand, this is why it's important that you start planning and budgeting and forecasting, and that's not your job, right? So, you start thinking, hey, I'm going to hire employees, but it's not just paying their salaries, right? I have to think about benefits. I have to think about taxes. I have to think about all these other things that come with hiring and employees. And, as it is a sign of growth, it's also a large responsibility to have employees, right? You got to take care of them. That they are, when I was talking about the three main pillars, right? I would say your employees, are in that, in that same situation of being a main pillar, right? You cannot grow your company without great employees. So you got to take care of them, but you also have to take care of the federal tax, right? So very important things. And income taxes. Let's talk about income taxes because, as you notice, we talked about payroll tax and we talk about state tax. And now here's another tax we have to worry about, which is income taxes, right? You wanted to open a business, you want your business to grow, you know, you start understanding why, it is complicated sometimes to have all these different situations going on with your business, because just with the tax part, now we have 3 or 4 different taxes that we have to worry about. And when you incorporate your business, typically, we are either incorporated here in Texas or in Delaware. And I'll give you the example for IOOGO, right? We incorporated in Delaware for many reasons, right? One was because that's what the lawyer told us to do, right? I'm just kidding. The reason most companies will incorporate in Delaware is just because the law, right? The business law is just, so older, and there's a lot of opinions, on the law, and there is a, for in terms of investment, right? It's probably the best law to use, and there are other benefits, right? And other I'll say that there's a lot of pros, then there's a lot of cons, right? So we'll talk about some of those today, but however you register as a company is going to determine what form you use to file your taxes. And let's go into Form 1120. And that form is for all of us corporation, right? If you are, to give you an idea, IOOGO Incorporated, if you are Startup Incorporated, whatever incorporated, more likely your accountant is going to be filing Form 1120. We are entrepreneurs. We want to do things ourselves. We want to, do a lot of cool things. But when it comes to taxes, I advise you, don't do it, right? Don't try to come in here and try to, file your own corporate tax return, because it's not fun. One, is not fun to do. Two, it can take you a long time. It can take a lot of time away from your day-to-day, right? And 3, there's a lot of chances you're going to make a mistake, or you're not going to set it up right for years to come. So a lot of us are going to file 1120. A lot of us are going to begin the process of carry over losses, because we're losing, money on year 1, year 2, maybe year 3. Maybe you're like Uber and you're always going to lose money. So then you file, you register as a corporation in the state, whatever state you are, and then we tell the IRS that you are a corporation from this state. And then we start filing your tax return, right, year over year. So the return is due typically on April 15th. If you're in Texas, your due date right now is June 15th, just because of the extension we received. But you don't want to wait until the end, right? You want to get that part out of the way so that you can focus on what you focus on. And the other form that I like to cover, right, is 1120S. S corporation. You probably heard of this, S corporation, and that is, for most of you who are LLCs, right? When you're an LLC, you register at the state level, and then the IRS doesn't know that you exist, right? You have to tell the IRS, hey, IRS, here I am in an LLC. I am, ABC LLC, and I'm going to file my taxes. I'm going to pay taxes either through the personal tax return of the owners, right? The LLC members, or, I'm going to fill out, I'm going to become an S corporation, and I'm going to do the whole pass-through income situation, right? And that's where you start needing the help of an accountant to see what is more beneficial for you, depending on the size of the business. Most of us here in this event are probably corporations, because we're raising capital, or we raise capital, we have investors, we're Delaware corporations. But there are some of you who are LLCs who, are looking at, how am I going to file my taxes this year, right? The worst thing you can do is open an LLC and then take that LLC into your personal tax return and claim it as a self-employment, tax return, right? It's so anyway, so there's a more complex situation there, but I just want to leave you with the high levels. One, it's important that if your business is going to move forward and grow, it's important that you start doing the right steps to have this business as an S corporation. 2, you don't want to file your tax, your LLC tax return, forever on your personal tax return as a self-employed individual, right? For several important reasons. So we talk about the first two, the main two forms, and there's Form 1065, which is for partnerships. I'm not going to cover that too much today, but there are two state level taxes that we need to pay attention. One is the Texas franchise tax, and I'm gonna give you some details there. That if you are a Texas company, if you are here in Texas, operating in Texas, right? And I'll give you the example: IOOGO Inc. We are a Delaware company, right? We are registered in Delaware, but our headquarters, most of our staff is in Texas. We work in Texas. Most of our revenue comes from Texas. So that means we have to file, we are a foreign entity here in Texas. So, but we still have to file the franchise tax report. Now, if you are a company who, you are under the $1.1 million revenue threshold, then you don't have to worry about paying franchise tax. But you do have to worry about doing your report on a yearly basis, right? That report right now is due June 15th. But you want to make sure that your report it's done so that the state is not reminding you later with a threatening letter saying, "Hey, your reports, your business is in jeopardy, being forfeited, your existence." And you just want to make sure you get into the habit of understanding what your tax deadlines are. There's also Delaware, right? So we have and I gave you the example, right? We are incorporated in Delaware, and Delaware has this March 1st deadline that was not extended for, there's no reason to do it. So if you haven't done this, if you are a corporation that was registered in Delaware and you haven't done your Delaware franchise tax, more likely you're going to be hit with what is it, Christy? $50? Is it a $50?
Yes.
$50 late fee on top of whatever franchise.
And that increases the longer you wait.
It increases the longer you wait on top of your franchise tax minimums, right? So why do I like to use the minimum? Because most of us are not, most of us are in the process of starting our business, or maybe year 1, year 2, you haven't done much changes to your shares, right? There isn't much to calculate, and this is where I would say you need the help of someone who knows how to do this, someone who's done this before, so that you do it right. I'm not sure if you can see this example in this report, but there's a number on the very top, and it says franchise tax amount $27,377, right? And then the first thing you do is you freak out and you just close the report and you go ask for help, right? Because the way this report is it's created, we need to enter some data in here about your business and about the movement of shares, how the shares move throughout the year, to really come down calculate the franchise tax, right? It's not based on revenue, just solely based on revenue like it is for Texas, and it's not and it's not as brutal as California, right? So for instance, Delaware, if you get to the minimum tax you're going to pay, it's going to be $400, right? There's just no escaping the $400. You're going to end up paying $400, whether you like it or not. That's how it works. 400 or more, depending on what the business is doing, right? This is what's so important, to pay attention to what you do throughout the year with shares, because at the end of the year you have to make this report that focuses on what how the cap table move, right? How the shares move, right? And in California, you just have the fee, the minimum fee there's $800, and it just goes up depending on your revenue, right? So Texas is a little more lenient, that if you are under the $1.1 million, then you don't have to pay much taxes, right? You still have to file the report. So I wanted to talk to you about the tax forms that more likely you will be filing, the tax deadlines that you have to keep in mind, the responsibilities that you have to understand, that as a business owner, as a founder, as an entrepreneur, whatever you want to call yourself, that you have. It doesn't, just because we're called founders or CEOs or startup, or entrepreneurs, it doesn't change the responsibilities, right? The IRS will treat us all the same. The types of taxes that you have to pay, we went through federal taxes, state or franchise tax, and also estimated taxes. It will get to a point when your business is it's growing its profits, growing and growing and growing and growing, that you're going to inevitably end up having to pay estimated taxes. The government is going to ask you, your accountant is going to advise you that you start paying estimated taxes, so that you don't have a surprise at the end of the year, right? The only people who have surprises with taxes are people who think taxes are not real, or people who don't understand that either you pay taxes throughout the year, or you will pay them at the end of the year. That's typically how it works, right? At the beginning stages of your business, more likely you don't have to worry about taxes, because there are losses, there's no revenue, there's little revenue, there's more expenses than actual revenue, right? So you don't have to worry so much about taxes. But as your business continues to grow, and we all want it to grow, right? Then you start thinking about, okay, where's my tax strategy? I got to set up a tax strategy so that I can take advantage of credits, deductions, and other things that we're going to cover here in the next 5 minutes. But you also want to be aware that at some point, inevitably, you will have to pay some kind of tax.
Yep. Yeah, so as Josh said, that you can't completely get away from taxes, but there are ways and opportunities where you can at least reduce your tax liability. And one of the most popular ways, and one of the favorite ones I like to talk about, is the R&D tax credit. It's a lot of capital factory companies qualify for this. So if you're part of Capital Factory, there's a good chance that this could be for you. But what the R&D tax credit does is it rewards companies that are involved in qualified research and development activities. And the money that's spent on that research and development can be applied as a credit to taxes, whether it's payroll taxes or income taxes. And so the cool thing about it is, if you have a payroll tomorrow for Friday, and there's payroll taxes that you would typically have to pay on behalf of those employees, instead of paying those taxes, you can keep that money, use it for more R&D, use it for sales, use it to grow your business. So it's a credit that you should definitely check out, ask your accountant about. And then the next two credits are as a result of COVID-19, the employee retention credit and the sick and family leave credit. These are important to know if you were impacted by COVID-19, that you are looking into using these credits for your benefit, to either recoup some of the money lost, that can help sustain your business.
Yeah, and then on the right side of your screen, you see deductions, and these are the things that need to be strategized throughout the year. And as your business is growing, right? You want your business to get to the next level. You want to get to 10, right? You want to get 100%, right? Well, then you got to get through the first steps, right? And then a lot of this is making sure that throughout the year, things like startup costs, depreciation, QBI deduction, right, and are being calculated, are being worked on for you, so that you have the best possible outcome at the end of the year. Think about accounting as laundry, right? If you do laundry once a month or once a year, it wouldn't be a good outcome, right? And it's the same thing with this, right? It's a daunting. It becomes a more costly, daunting task if you leave it at the end until the end of the year, right? And when we talk about employee benefits, one of the biggest opportunities and mistakes we see in the industry is just founders not taking a salary when especially when you already raised capital, right? You take a salary, and you want to think about you want to think about, your business and the money you just raised, and you want to throw it back at the business, right? And that's cool. We've all done that, right? But remember that your salary, your benefits, and things of that nature become a deduction for your business, which it means less, it means a lot of things, right? Less tax calculations or less, taxable income, things of that nature, right? And if you're going to inevitably end up losing money, right, that's more carryover losses for the next few years, right? So the idea, and we all heard this before, Amazon doesn't pay any taxes, or company X doesn't pay any taxes, right? Well, that's not entirely true, right? Amazon pays a lot of taxes. They pay a lot of other taxes, but because of the nature of their business, they lost a lot of money for a very long time. So, they take advantage of carryover losses, right? Which you could do that as well if you're set up the right way. If you are, if you are doing the right steps, to take advantage of that benefit. And, there are all sorts of other things that can come into the equation of how taxes are calculated. Christy just mentioned the R&D credit, right? That's also another credit that it doesn't necessarily have to be used for payroll taxes. It can be used for your general income tax liability. So accountants come into play here, and a tax strategy. It's important. So as your business is growing, you are not, wasting, money, and or you're not underpaying, you're not overpaying taxes. The whole idea is to ensure that as your business is growing, you are being compliant with federal and state agencies, but you're taking advantage of all of these great options that you have at your disposal.
All right. So we've come to the end, and I know we've covered a lot of material, and you may be wondering which exactly applies to you, since you can be different different types of entities that have different reporting requirements. So if you're not sure and you need some additional help, you want questions specific about your business, please schedule a free 30-minute accounting consultation with one of our experts. We are also we'd be coming towards the end of tax season, but since Texas has that extension, you have a little bit more time. But as Josh said, you don't want to wait till the last minute. So if you haven't filed your tax return yet for your business or personally, you can also schedule a consultation to see how we can help you and make sure you don't miss that deadline.
And I want to leave you this very good resource for those of you guys who are, looking for, any legal advice, or, just, you want to chat to a very cool lawyer, right? There's Kyle and Jones Kurtz, that's his law firm. You can reach out directly to him, for any questions or anything, anything that, that you need. It's very important as your business is growing, right? You want to have the right team that's going to support that growth. And we feel that that's why we are here for. So we're going to stick around for a couple of minutes, if there are questions. And if not, feel free to reach out directly to us with your questions. I know that it's, in situations like this, it's probably hard to say, hey, what do I ask? How do I ask these things, right? But, we'll stick around for a little bit. And if you just want to reach out to us privately, feel free to do so.
Also, follow us on social media. We're always posting tips for businesses related to both tax and accounting there. You can find us on Instagram, Facebook, LinkedIn, Twitter. So thank you again to Capital Factory for hosting us. We hope you found this beneficial as our clients have had in the past, and look forward to speaking to some of you soon.
All right. Thank you. Bye-bye.